to see how to use some moving average to buy stocks. Basically, there are many different moving averages. One is simple moving average, another one is exponential moving average, the third one is weighted moving average. The simple moving average will be very slow compared to exponential moving average. Normally, moving average will be having different averages like daily, 50 period moving average, 20 period moving average, 10 period moving average, like that many moving averages there. So basically, moving average is a technical analysis tool that smooths out price data by creating a constantly updated average price. The average is taken over a specific time period like 10 days, 20 minutes, 30 weeks, or any time period the trader chooses. There is advantages of moving average in your trading as well as options on what type of moving averages to use. So if you see below, uh, moving averages are useful enough on their own. They also form the basic technical indicators as the moving average convergence variance. Why we are using the moving average is like we will be knowing the average movement of the price and also cut the amount of noise on a price chart. We can able to predict the direction of the moving average in, by seeing the charts, whether it is the sideways or upward trend or downward trend. If you see the below moving averages, we can see that how smoothly it is going upward and the chart pattern, candlestick pattern touching the line in these moving averages. See how it is respected this support area in the moving average line. So here in this chart it is showing that this 50-day moving average is showing the 200 moving average how it is nicely touched, and after it is touched there is the rally in price. So there are other moving averages similar to simple moving average. Exponential moving average is the very smoother one and it will be nearer to the stock price. So we can able to see that whether it is getting reversed or it is rallying from the down market. We are able to see very clear picture on exponential moving average. So there is a combination of moving averages like simple moving average and exponential moving average, and we can able to see that exponential moving average is nearer to the current market price. So there is the crossover of moving average. We will be able to do it in our technical analysis, and mostly the common criteria for the technical analysis like whenever there is a candle above the 200 moving average, it is the upward market trend, and whenever it is falling below the 200 moving average, it is the downward market trend. For more videos on other technical analysis, I will be uh, providing the video in the next coming videos. If you like this video, please subscribe and click on the bell icon so that the next video you will be getting as soon as I upload it. Thanks very much for watching this video. We'll see you in next video. Bye.